Hello, everyone. I am Shambhavi Biradar, and today I am presenting my project on taxation system, specifically comparing ancient India versus modern India. This project was conducted under the guidance of Prof. Hemavati Biradar at BLDEA's College of Engineering here in Vijayapura. Let's dive into how the way we fund our nation has changed over thousands of years.
Tax season. Just hearing those two words together probably makes you groan a little bit, right? It's literally one of the most universally dreaded times of the year. But what if I told you that looking backward, like way, way backward, might actually completely change how you think about paying your dues? Welcome to this explainer. Today we're diving into a really fascinating historical contrast: ancient wisdom versus modern complexity in the evolution of Indian taxation. Imagine this for a second. What if a tax system naturally protected you from going bankrupt? Instead of a looming bureaucratic nightmare full of strict deadlines, imagine a system where paying your share was fundamentally seen as a moral duty, and one designed explicitly to keep you afloat, even in the absolute hardest of times. Sounds completely like a fantasy, right? Well, it actually existed. Okay, let's dive into this. Section 1, Ancient Wisdom and Dharma. So we're stepping back into ancient India, where the entire paradigm of taxation was built on three main pillars. First up is the Arthashastra. This was a highly detailed ancient text by Chanakya, who you might also know as Kautilya, and it laid out the exact rules for how a king should collect taxes fairly. Next, we have duty, or dharma. See, paying tax wasn't viewed as a punishment or just some arbitrary extraction. It was a true moral duty. The absolute golden rule here was that the king only took what the citizen could easily afford. And finally, public good. Every single coin or grain collected had a strict, visible purpose: to protect the kingdom and help the poor. There was a direct, undeniable purpose to the collection. In practice, they kept things incredibly simple. There were basically three main categories of ancient taxes. You had bhaga, which was essentially a farm tax paid straight out of the crops grown by the farmer. Then there was kara, a property tax collected from villages and orchards to keep the local village administration running smoothly. And lastly, shulka, which was a trade tax. You can kind of think of this one like a modern customs duty. It was collected whenever merchants brought goods into the city limits. Now, out of those three, there is one mathematical fraction that absolutely defined the ancient era: 1/6. This was the famous Bhaga rule. Basically, it was the standard farm tax where farmers paid exactly 1/6 of their harvest to the crown. Now, what's really interesting about this is how it functioned in the real world as a built-in safety net. It was a perfectly scalable system. I mean, think about it. If it rained well and the crops were massive, the king got more. 1/6 of a huge harvest is a ton of grain, which is fantastic for the kingdom. But here's the genius, incredibly compassionate part. It was completely safe. If the crops completely fail due to a severe drought, well, 1/6 of zero is exactly zero. The farmer paid absolute zero tax. So the system literally naturally protected poor farmers from going bankrupt during hard times. So how did this all look on the ground? Well, ancient taxes in reality were as grounded as the agrarian society they served. First, direct collection. Royal officers actually visited farms to physically measure the crops. There were zero middlemen taking a cut. The farmer just handed over the grain directly. Plus, there was highly visible output. Farmers could literally watch their hard-earned grain going to feed the army or getting stored in local granaries for emergencies. And honestly, the best part? Simple rules. I'm talking no paperwork, no lawyers, and definitely no complicated math formulas to decipher. Section 2. Fast forward to modernity. Fast forward to today. We've officially left the physical world of ancient farms and logged right into the digital realm. Instead of a royal officer measuring out your grain, the modern government taxes your income. And the fundamental mechanism here is a tiered system, meaning the more you earn, the higher the percentage you pay. Under the new regime, it starts at 0% for annual income up to 3 lakh rupees. Yep, completely tax-free. But as your earnings scale up, so does your rate. It bumps up to 5%, then 10%, 15%, 20%, steadily climbing until it hits a maximum of 30% for earnings over 15 lakhs. It's a mathematically precise, rigid ladder based entirely on financial numbers. And, with this modern money-based system comes a whole new dictionary of jargon. Take something like ITC, or input tax credit. In modern commerce, we really want to try and avoid taxing people multiple times on the exact same supply chain. So ITC is simply a rule that gives a business owner a discount when paying tax on their final product, provided they already paid tax when buying their raw materials. It's a pretty brilliant mechanism for fairness, actually. But let's be real, it definitely requires some serious accounting and paperwork to keep track of the whole shebang. And this brilliantly illustrates how we categorize literally everything we consume today. The GST, or Goods and Services Tax spectrum. These are your indirect taxes, the taxes already added to the price of that product you just grabbed off the store shelf. The system spans from 5% for absolute basic needs. We're talking spices, sugar, basic shoes, life-saving medicines, all the way up to a hefty 28% for luxury goods like big cars, aerated drinks, and tobacco. Tucked in the middle, you have standard goods like butter and mobile phones at 12%, and most standard items like computers and restaurant services at 18%. It's a highly detailed structure explicitly designed to tax luxury a lot more than necessity. Section 3. The complexity gap. So the crucial point here is understanding just how wildly these two paradigms contrast. Look at ancient India. The main rule was dharma, moral duty, and fairness. It was incredibly simple. I mean, anyone can understand a basic fraction, right? You paid in physical goods, and the flexibility was just off the charts. If the crops failed, the tax was simply waived. Boom. Modern India, conversely, operates on strict legal laws and penalties. It's highly complex, so much so that you often need chartered accountants or tax experts just to navigate it. You pay via digital online portals using money, and the flexibility is, well, notoriously low. We're talking fixed rules and strict fines for late payments. Honestly, just think about the sheer visual difference in the taxpayer experience. Back then, you have this tranquil, grounded reality of the ancient harvest, a super direct physical interaction with the fruits of your labor. And now? You have the modern taxpayer, probably staring completely stressed into a glowing screen at 11:59 p.m., hands on their head, buried in a literal mountain of receipts. I am absolutely sure many of us watching this explainer can relate to that modern scenario. All that digital data and those unyielding deadlines definitely create a very unique kind of modern tax anxiety. And because of this massive complexity gap, we face some pretty significant challenges today. First up is tax evasion. Because taxes are high and the rules are so immensely complicated, some people try to hide their income using cash just to avoid the hassle and the financial hit. Then there are website issues. Government digital portals are powerful, for sure, but they have a tendency to crash on the very last day of filing due to insane traffic. This causes immense stress and can literally lead to unfair late fees for citizens who were just trying to do the right thing. And finally, lack of awareness. The actual nuts and bolts of filing taxes aren't really taught in schools, so you have a huge chunk of the population growing up without understanding basic financial laws. It leaves them completely in the dark and reliant on expensive experts.